Hi there, Serial Trader here. I'm going to go through the major US indices, and at the end of the video I'll also do an update on kind of where we're at in the overall longer term sequence off the 2009 lows. I got a request to look at that, so alright, let's get into it. So hourly chart on SPX, since the last video the proposed lows have certainly held, and we've done a nice impulsive advance off those lows. So on SPX, we've actually done a nice 5-wave sequence and actually made new all-time highs. And then it looks like we're doing a corrective decline off that initial impulse wave up, and I think we may be at or near the corrective decline lows here as well. So basically we just got a 5 up, now a 3 down. Didn't even quite get to the 38.2% retracement, at least not yet. That's certainly a possibility to touch early this coming week, although it's quite possible that we already have a hard low in place. And I'm still just long on some existing positions, haven't made any changes yet. I don't think we're done going up. What would change my mind, obviously, would be taking out these lows down here. So on SPX, that would be 37.23. I just don't foresee that happening here. But if it does, that would change my mind to abandon the existing long positions. Looks like as far as the corrective pattern, maybe an expanded flat, little wave 2 here or something like that. Not too worried about that. Bottom line is we got 5 up and looks like another 3 down, either pending or already in place. So that's SPX. Now on NDX, it's been lagging. So the Nasdaq's been lagging, both the S&P and the Dow, but nonetheless, I can still get a clean 1, 2, 3, 4, 5 up for an initial move off the bottom, and it looks like an ABC down to about the 50% retracement, which ideally will kind of hold as far as the retracement level. So NASDAQ did a less significant move up off its relative lows and has done a more significant retracement. But I think once the bond market kind of stabilizes and bonds stop tanking, which I think they're at or near the point where they're done, and bonds start rallying again, and interest rates start coming back down, which is what I think is going to happen. I think you'll see tech start to catch a serious bid once again, and even so, I mean, bonds have been still making new lows, and tech has stopped making new lows, and in fact, we've started what I think is a new uptrending move in tech. So the relationship or the correlation, I think, is already breaking down, or starting to. And you might say, well, hey, this looks like kind of a weird count. Well, we got 1, 2, I think that's our 3, and I think you can explain this quite nicely with a 4th wave running triangle like this. And let me just adjust the degrees here. One more down there. Okay. I think this explains it quite well to give us a clean 5-wave advance off the lows, right? And then, yeah, we're doing our 3-wave retracement, which I think may already be done right around that 50% retrace level. Okay, so that's really what I'm going through on the shorter term wave patterns here. Just thought I'd show the S&P and the Nasdaq. But now that that's done, we'll go over to the thinkorswim candlestick charts. And yeah, you can see we made new all-time highs. Looks like Friday was just kind of a doji day. Nice support around that 20-day simple moving average, so that's good to see. And it was also quadruple witching day, so basically a whole lot happened intraday, and then at the end basically nothing happened, which is somewhat typical of those expiration days. A bunch of positions change hands or roll over, and then at the end nothing really happened on a closing basis. So not very surprising to see that. As far as daily candlesticks, not really much standing out here. Weekly, not a significant pattern really to interpret there. Okay, so that's really the S&P. And let's see here. On the Dow, I guess we'll go next. So the Dow certainly had our nice 5 up, 3 down, and very strong. So it looks like we're in a third wave up here. If this is the 1, this is the 2. Looks like wave 3 is in progress here on the Dow. And you can see the Dow finding some support there right on the T line. So the Dow still looks strong. Obviously some minor consolidation, but so far it's been very minor on the Dow. Weekly on the Dow. A minor week of consolidation. I mean, you could call that a possible, inverted hammer, bearish reversal, but I'm not giving it a whole lot of weight yet. I'd have to see some, more substantial decline to actually think that that's anything meaningful. So basically just a consolidation week there on the Dow after making new highs once again. That's how I'm looking at that. Okay, let's go over the Nasdaq Composite. And on the Nasdaq Composite, you can see we had our nice ABC down as identified in that last video. And we haven't gone up and made new highs yet like the S&P or the Dow, but I think we've got, again, just to reiterate, we've got our initial 1 up, and I think this is our little wave 2 down, and then I think there's further upside to come, and obviously expecting to take out the old highs and make new highs eventually here on the Nasdaq. And perhaps it will accelerate, like I said, once the bond and interest rate situation kind of sorts itself out there, which I think it's, close to that point. Okay, so that's the Nasdaq. Now the VIX. VIX is breaking down, not really even on these, consolidations or these declining kind of days. VIX really not getting much action, so I interpret that as being quite bullish overall. Obviously, a declining VIX is a, inverse correlation, so it's a bullish sign for the overall market. Okay, and on the VIX VVIX tool, we are on a minor sell signal here, but I think that will probably cancel out pretty soon here. We had a bit of a divergence between VIX and VVIX in that VIX was making new lows, VVIX was not making new lows. Then of course we got a little pop up in VVIX above the red moving average, and we've come below the blue moving average on SPX. So minor sell signal, not really something that actionable, I think, as the overall trend, I believe, will reassert itself fairly soon, but just to be aware of. Okay, now just to finish off the video, we'll go back to the overall situation from the 2009 low, just to answer the request I got about this. So we're in log scale here. So obviously if we go in arithmetic scale, it looks a little different, but log, I think, brings things in a better proportion once you have this much of a difference in your scale from your lows to your highs. Anyway, so from the 2009 low, here's where I think we're at in the overall sequence. I think we got our 1, this was our 2, that ended in 2011. Then we had this huge wave 3 up, which I believe ended in 2018. And then we had our expanded flat wave 4. We had A, B, so a 3 down, 3 up to new high, and then a 5 down to new low. So ABC expanded flat wave 4, which obviously ended in March of 2020. Now from there, I think we've done the 1 and the 2 of this larger 5, and I think we're currently somewhere, and it's debatable where we're at, but I think we're somewhere in the wave 3 of that larger 5, and then of course we still need the 4 and the 5 of the 5 to complete. So I don't think we're really that close time-wise. I mean, we might not be so far away price-wise from the actual major top, but I think, and we could be still. I mean, this thing could still go, 5,000 plus. Who knows? These are just placeholders I got here, not price projections. But looks like there's definitely some pattern development, quite a bit of it possibly left before we can even start entertaining that we got the major wave 5 peak in place. But once we get to that point, however many months or more that is from now, could be longer than even I expect. These things often linger longer than you expect them to. Once that happens, even in a very bullish scenario, the depth of corrective waves, the guideline for the depth of corrective waves would be going down to at least the previous 4th wave of 1 lower degree, and that would be the March 2020 lows, which isn't really that crazy. I mean, we were just there last year, right? I mean, it's not like it's so unbelievable that you could retest those levels at some point. But as far as I mean, we're already near 4,000, and that would be down closer to 2,000. I mean, it'd be close to a 50% retracement, or sorry, a 50% decline in the S&P just to go touch, last year's lows, which would feel like the end of the world, but really, like, as far as the chart goes, that'd be a pretty shallow retracement, really. So just keep that in mind. As far as like tradable, this isn't tradable. These longer term, like this is a multi-year sequence. That's not tradable. I mean, we're gonna see all kinds of warning signs and little 5 downs and 3 ups, etc., on the shorter time frame, like the daily or whatever, even the weekly, long before this does anything, right? But just as far as where we're at in the overall move off the 2009 lows, this is where I think we're at for what it's worth. Do what you will with that. But bottom line is, I just don't think this overall bull run is done yet. Is it getting extended? Is it in the later stages? I mean, in the context of a over decade long uptrend, yes, I think it is in the later stages. But I mean, this could still go on for a while, and I think it will. So that's my 2 cents there. All right, Serial Trader signing off.